Hey, welcome back to the Hub channel. My name is Brandon, and I have the one, the only, Rob Roy here today with me. Rob, I know you've had a lot going on in the market today. Option expirations, a lot of moving parts, obviously. Tell us what you have going on. And by all means, guys, if you are in here right now, go ahead and subscribe to the channel and put any questions you have for Rob, because he's going to get to those later in the stream. Rob, man, how you doing?
Good, Brandon. How are you? Happy Friday to you. And yeah, Expiration Friday, the busiest day of the month for an options trader. So been a lot going on today, and a lot going on in the market. Lots of things to talk about. So I hope you're well on this Friday. And I'm just going to jump right into it. So we take a look at the SPY chart, and I've been talking. I believe I mentioned this last week as well. 440. Was the target level that I thought we would at least retrace to, coincided with where the 50-day moving average is, and we've just gone right through it like it didn't even exist. I thought we might have a little bit of a bounce here, some support, the 50-day moving average, etc., and the market has just gone through it, to use the old cliche, like a warm knife through butter. However, we are just a little bit oversold at this point in time. Now, where do we go from here? That's what everybody wants to know, right? Okay, so we hit the first target. Now what's next? We have a 35% corrective level. Maybe we go to the 38.2%. Maybe we go 50, 61.8. And when I'm looking at the chart, it's hard for me to see that we gather ourselves for any sort of a significant bounce, maybe a short-term bounce, perhaps even back up to test 440. But I really think that our eventual landing spot here is going to be 420. There's a lot of support there, and we talked for a long time when the market was moving up how 420 was going to be resistance. It acted as resistance for quite some time, as you can see here, back in February, April, May. We finally broke through it in early June and never really came back to test it. I think that's what's going to happen now. And the interesting thing is, I was talking to our insiders last night. For those that have access to our alert service at ewotrader.com, every Thursday night we do a session for them with an extended Q&A, and talked about how I think setting some sort of a trade down here around 420, whether it's a butterfly, something along those lines, makes a lot of sense. I really like doing out-of-the-money butterflies. They are directional in nature. A lot of people don't realize that. They think that butterflies are just sideways trades, but you can make them directional. And you take a look at this, and it's difficult not to get the itchy trigger finger to do it today. And let me tell you why I haven't, that I'm going to wait just a little bit into early next week. Here's the DMI, my favorite confirming indicator to Elliott Wave. And you can see that the ADX is curling back up. The negative directional indicator has crossed over the positive. That's telling you that the sellers are now in control. And the fact that the ADX is moving up, a lot of people get confused on this, thinking that an ADX moving up means that the market's going to move up. That's not how it works. The ADX is a measurement of strength. So the fact that we're moving lower and the ADX is going up is telling you that there's some legitimate strength to this downward move. And so we'll talk more about that in the U.S. market update over on the EWO channel later on. But I wanted to show that the fact that the DMI is showing this, I don't put as much weight in the DMI on downward moves because it's a little bit of a lagging indicator. And we need something that's a little quicker, because we all know the market moves down faster than it moves up. So taking the DMI off and looking at the CCI, the commodity channel index, which works really well, very responsive to short-term moves. And that's what you want when you create a technical trading system, is you want to have a combination of indicators to where one indicator's strengths offsets the weakness of the other ones. And while the DMI is a great indication of a strength of a trending move, it's not so quick to respond, but the CCI is. So when you look at this, you can see that we're down here almost to the negative 200 level. And when you get way down here, these are called extreme points. And so you start to learn the range, and it can change anywhere between 100 to 200 on the upside, negative 100 to negative 200 on the downside is usually the range where you spend the majority of the time in the CCI. Some stocks can go outside that range. So you always want to make a look, take the time to look and see historically where have those extreme point lows been on the individual security you're looking at. So when we look at the SPY, you can see that, yeah, we're kind of down there. So in other words, what it's telling me is that we're more ripe for some sort of a little bounce than we are for this continued move lower. Now, stocks can stay and the market can stay overbought or oversold for periods of time, but this indicator is what held me off from putting on some sort of a downside trade for that 420 level. We'll see how we close today. We opened lower. What was the low of the day here? Was right around the very low of the day was right when the market opened at 9:30, and so we've been rallying since then. So perhaps we continue that into the close. Maybe we even open higher on Monday. But if we get anywhere in the neighborhood of that 440 level and this CCI bounces, then I think that's a good opportunity to put some sort of a trade on with an expected move down to 420. So that's kind of what I see is going on with the markets right now. The last thing I wanted to show just real quickly, Bitcoin has broken down below that 29,000 level. We'll cover that in more detail also in the U.S. market update over on the EWO channel later on today. So if you want to talk more about Bitcoin, we can handle that there. But for now,
did you see, Rob, that flash crash in Bitcoin yesterday? Everything went haywire with there was Chinese news. There was news that and this is old news. This is old news. Tesla sold their stock and all that, or sold all their Bitcoin. There was, I guess, rate hike fear and all that stuff kind of led to the Bitcoin crash yesterday, and it was phenomenally fast. Ethereum fell, Bitcoin fell, everything fell, and I think that's actually kind of leading partially to what we see in the SPY today, or the SPY drop over the last few days. I think just global fears, global macro economy, all that stuff is contributing to what we're seeing. But it's interesting to see your charts lining up perfectly to everything that's going on in the macro environment. So love your feedback on this stuff, Rob.
Yeah, I know those are great points, Brandon, because a lot of people do believe that there's, I don't think there used to be, when Bitcoin was screaming to the upside, et cetera, correlations exist for periods of time. And I think that gets people in trouble sometimes, is they find a correlation in the market and they think it's always going to be that way. It's important to note that their correlations exist. You watch them and they work until they don't. But you're 100% right that recently there has been a correlation between Bitcoin and the market breaking down below 440, and you get that flash crashes, as you said, and Bitcoin with a perfect storm of negative news. Even with that halving thing that's supposed to be coming on next quarter, is this going to be the one time that it breaks that streak where every time around 9 months before that occurs, it rallies? I don't know. It's pretty scary, pretty spooky there, but awesome points here. You're 100% correct. And pretty ugly day in Bitcoin, Ethereum, anything crypto-based. It's having a rough time, down again today, and we'll update where we are exactly in the U.S. market update. But you are spot on.
Gosh dang it! Yeah, I feel like typically Bitcoin crypto has been kind of a hedge against the market, and so to see these coincide is kind of interesting. And I don't know if it's because we're getting more of the traders kind of sync up and more traders are going over to crypto, and so you see those tides kind of roll together. And also, I couldn't notice, but man, that's a beautiful hat you have on today. So I think it's our time to do our daily reminder that this is not Chuck Norris that we're watching here on screen. This is indeed Rob Roy, our trader here, our special trader here, over presenting his glory over here on the HUBB channel. And we do appreciate coming in here, but this is not Chuck Norris. So go ahead and keep that in mind as we roll to the next section here.
Oh, yeah, that's hilarious, Brandon. And it's funny that you bring that up because there's been so many comments over time, which is where the hat came from. I don't know. I just was wearing the hat for something different in one recording, and somebody said, "Hey, has anybody ever told you look like Chuck Norris?" And it exploded in comments. And now I hear it all the time, not just even not with the hat on. Sometimes, just walking around town and stuff. And I don't know. It's pretty interesting. I take it as a compliment, though. Chuck Norris is the man. So appreciate it. But yeah, pretty wild with the matching hats, and I appreciate you putting that up there.
Are you ready for some questions, Rob? Should we get over to the questions right now?
Let's do it. Yeah, let's see
go.
what people want to look
Our
at.
first question we have right here is from Lisa SH, and we saw you on the last stream, Lisa. Thank you so much for coming back. Can we look at AI? AI is what she wants to check out.
Yeah, we haven't looked at that one in a while, and that one was one that would come up. It seemed like each and every week. And is this the end of the whole AI phenomenon? When any stock just mentioned AI, I heard on CNBC yesterday where the comment was that Magnificent Seven has turned into the Magnificent One. Like all those stocks that had used AI as a mode to create a big bid were recovering. When it comes to this stock, though, man, we are right in an area where if it's going to find some support, it's here. It just passed the 61.8% fib level, and there's a lot of support right here. So if the person asking the question, was it Lisa? If Lisa is long on this, I would hang in there, because if it's going to bounce, it's going to bounce here. If you're looking for an entry, I would wait and let it actually bounce. If you're looking at this from a short entry, it's a little bit oversold. I would want to see if we close back below 30, because regardless of whether you're looking long or short, the key is going to be, can it close below 30? If it does, then I think we easily move to 20, and probably rather quickly, because there's just not much in the way. You can see these big spikes between 20 and 30. So the next major support level is 20. So it's going to desperately try to hold on here at 30. And if it can do it, maybe we get some sort of a bounce. It just depends on, we've got interest rates going up. We got the dollar going up. There's so many headwinds. We got the Fed coming out and being hawkish again. All things that we'll talk more about in the U.S. market update later on in the on the Evo channel. But right, this is the ground zero here, Lisa, for this stock. It needs to hold 30. So if you are long and you're holding it, if it breaks below 30, I would get out. If you're looking for an entry, let it tell you, let it give you the bounce, and then you can add to it. But major point of needing to hold here on good old AI.
It's got to hold. It looks like it could easily break to the downside, that channel there. Holy crap. Okay, so the next question we got.
It looks pretty ugly. It really
does looks pretty ugly to me too. I'm looking at that thing. Yeah. Watch out below. Yeah. Holy cow. Watch your stops. Yeah, set your stops or whatever we got to do. Will Airley, can you look at Apple?
Katie bar the door, Brandon? Were you about to say?
What's that? What would I say? Is this a Katie bar the door type situation where we want
if it breaks 30, it is. If it breaks 30, it is. So.
That's right, dude. Look at that thing, Katie bar the door. This is funny because Rob and I were talking a little bit about this off stream. Dude, I've never heard this expression before, and so he had to explain it to me. He's like, we go back to when I was a kid in grade school, back in the day when this picture was made. That's when they had this term come out. So this is good. Yeah. Next question we got is from Will here. Will wants to know if they can look at Apple, and he has one more, but I'm only going to give you Apple for right now, so you can check that one out.
Yeah, no, that's a good one to look at, and the amazing run that Apple had. This 45-degree angle move, that's as good as it gets. But look how extended the Wave 5 got, even though, and I would submit to you the reason it went to 186% Wave 5 extension is because of that 45-degree angle. It's my favorite trending move. And the reason for that, as you can clearly see here, we know that all stocks move in impulses and corrections. That's the crux of Elliott Wave. That's why Elliott Wave works so well. That's how the markets move. But when you move in this 45-degree angle, the corrective moves tend to be less, so they're not as severe until the move ends. And now Apple has broken below that, and the question becomes, where does it find support? I've often said, and I still maintain this, Apple is a very difficult stock to short because they have so much cash, and if they see an opportunity, they increase their buybacks, which can limit the downside. However, because they're doing that, they are shrinking the float, and if we do get more negative news in the markets, if we do have a more significant correction, that works against you, right? So when you limit your float, when you reduce the float, you can create volatility. It helps to keep things buoying when you're moving to the upside, but in a significant correction, you tend to get more severe moves to the downside, and that's what Apple's doing. So right here is just, where does it find footing? Maybe here at 170, looks like that's perhaps an opportunity for it to try to find a little ground, but that one I think is a little weaker. I know it would be difficult to imagine, but the main part of support here on Apple is back down to 160. It was resistance here with the wave 3, resistance again in March, broke above it, tested it in April, took off. So possibly holding at 170. Wouldn't shock me to see Apple back at 160 though. But glad that one was brought up, because that move to the downside is probably shaking a few people up. But that's how it works.
He had another stock here, but I want to ask you a question on this chart here, because I see that Elliott Wave there, and it looks like we're already past the number 5. Does it go past 5 ever, the Elliott Wave, or can we still play it out? Or when do you set up a new Elliott Wave is what I'm asking, I guess.
So the fact that we've corrected this much, I'm pretty confident in saying. Now, it hasn't confirmed it because the 5 is still green. When it turns purple, that confirms these waves are over. So there's a chance that we could rebound and go make a new wave 5 high, but with already 186% extension, I would say that that's probably not going to happen. So when the wave 5 goes beyond 100%, when the wave 5 goes less than 100%, your target is the previous 4. However, when it goes past 100%, then you're looking for a 61.8% corrective move. So if we add that in, that brings us right dead in between the two levels that I just mentioned. The 61.8% correction is right there at 165. So I think we've got a lot of information telling us Apple will probably move somewhere between 160 and 170 before it tries to bounce. But great question, Brandon.
It's another one. Watch out below, I guess. You know what I'm saying? The other chart that he wanted to look at was AMD. Let's see how that one looks.
It's so funny because AMD was one, it might be a couple years ago now, but everybody asked about it every single week, and then it just went away and nobody cared about it anymore. And now it's back, and it had held in there so well. All of this consolidation here, it looked like maybe it was trying to get ready to move, but it did have a descending triangle, and that always makes you nervous. Go back into reading the works of Elliott. He always talked about pay attention to the triangles. They break out. It's very rare that you have a well-constructed triangle that doesn't make some sort of a break. The key is you never know what direction, regardless of whether it's symmetrical, ascending, or descending. Any of those triangles can break either direction. In this case, clearly AMD broke to the downside. Now we're right here at the 38.2% fib level. Can that hold? We are just a touch oversold. So we're seeing a few signs that maybe the selling, at least for the very short term, is overdone. And I'm not going to say that it's done, period, because it doesn't feel like it is to me. But it does feel like perhaps we get, whether or not we do it into the close today or the beginning of next week, some sort of a small bounce attempt. But it looks to me like AMD wants to come down to 100. It's not that far away. And I think that's we're going to touch 100, and we'll see where we go from there. But clearly a break from that descending triangle. It just couldn't hold 110 and needed to try to do that. So all these stocks that we're on, remember we've been talking, Brandon, about the whole analogy of fingernails holding onto a cliff. We had a lot of stocks that were doing that. Well, a lot of people are falling off the cliff, and a lot of these stocks
That's what it looks like. It looks like the cliff's kind of giving way for a lot of these stocks, which might create some new opportunities coming up here. Or if you're on the right side of this thing, it's already like set up perfectly.
Gosh, I've been waiting for some downside opportunities since 2020. That was the last time we really had.
We've just been holding on to this perfect escalator since like you said, 2020. That's been crazy.
Yeah,
so these are great opportunities.
Yeah, this is when you can make your money. You make money a lot faster to the downside. And I always hate saying that because I know people make everybody makes money when the market goes up, right? IRAs, 401ks, people in retirement years that are depending on that. It's just better for everyone when the market goes up. But the fact of the matter is, especially for options traders, you make money faster when it goes down. So I try to not highlight that too much. It's a fact, because I would prefer the markets to go up so everybody makes money. But as an option trader, man, you smile when things are going to the downside. That's your opportunities.
You should see how many people are mad that we called out the
Oh,
Katie
man.
reference. So many
Oh, really?
people. Yeah, well, I mean, obviously they don't want it to go down because I think they have positions in it. So they're like, no, Katie, we don't want Katie. No, we don't want.
Yeah.
We don't want to bar the door, Anyway,
Yeah.
so it's more of
Well,
like,
hopefully-
crap. That's not what they want. It's like when you go to the dentist, and you want the dentist to tell you your teeth are fine and they're perfect. They want you to say your position's fine, everything's looking good, but it's not. Bar the door.
Boy,
Okay,
your analogy
anyway.
is a rough one, Brandon. Talking about the pain we're feeling in the market, comparing to the dentist. Yikes!
I can't.
Those are both painful. So I hope it doesn't get quite that bad, but it might. So that's a really good
I can't think
analogy.
of a worse pain, but yeah. Anyway, so
Oh no!
the next question.
Toothache is the worst. Goodness.
Next question we got here is from
Send your notes to
ICUP.
Brandon. I didn't say that. He said that.
Yeah, don't get mad at me.
Yeah, no. You're gonna get all the mail on that one.
Thank you. Yeah, I'll give you my address after the stream. All right. Next question from ICUP here wants to know about Netflix. Seems like it has support at 365. Super bearish on Netflix right now.
Yeah, Netflix is really, really interesting because the earnings report came out, and the surprising thing was they actually did really well, and they've not gone after. I've gotten a message. I don't know if you have, Brandon, but they're after all the login sharing stuff. They're not coming at it hard yet, but you're starting to see the notices go out. But when they came out with their earnings report, it showed that they really hadn't made a big dent in all that. So they were given a little bit of a break as far as the potential for the next quarter's earnings being pretty good. If they do get more aggressive, because I forget the number, but it's really high on the number of people that are sharing their login information. And so the amount, even though they're offering a discount, if you've been sharing your login and somebody else signs up, they get it at a discount. But there's a lot of potential revenue to come in for Netflix. But with all that said, even with all that, the market breaking down, Netflix is broken down as well. So the goodwill that it was given from that, you can see the next quarter's earnings are not until mid-October. So how far do we go before then? And when I look at this chart, Brandon, I see the next support down at 360. So whoever was saying that it looks like a good short, I totally agree. I don't see anything to stop it now that it's broken below 420 with confirmation. We always talk about that. Yeah, I think 360 is the next level. Now, if I was short Netflix, I would definitely put my stops in there at 360 because there's a pretty good amount of support there, and it just depends on how fast it gets there. But whoever made that comment, I'm totally in agreement. It does look like a good short down to 360 to me.
So many short opportunities today. This is crazy. Elliott Wave Options wants to know about NVIDIA. What are your thoughts on NVIDIA earnings?
I know exactly who's asking that question with Elliott Wave Options. We talked about this last night too, and you can see there's the earnings report coming up. And one of our alert subscribers at ewotrader.com asked about going long into the earnings report because there's no doubt NVIDIA is hitting on all cylinders. They're doing everything right. They're positioned well, but the stock is extremely highly valued and it's priced for perfection, he tried to say. You can see, all the AI goodwill and everything that was given into it. And I just feel like it is holding the 50-day moving average. So note, Brandon, this chart looks a lot better than some of the other ones that we've just looked at. But I feel like if somebody wants to take a shot, they're going to have to blow earnings away because they're so highly valued, that there's going to be expectations of a good earnings report. I don't think just a good earnings report out of NVIDIA is going to be enough to propel it higher. They're going to have to blow the numbers out. Maybe they will. And if they do, perhaps that's one opportunity to move to the upside. The fact that it's holding here at 420 going into earnings is definitely a positive. But I think if you got some play money and you wanted to take a shot at that, please don't load the boat, back the truck up, whatever the old analogies are. Don't put all your eggs in one basket on NVIDIA coming out and blowing it out again, because they have in the past. It's priced for perfection. So I can understand if somebody wanted to at least have a little bit of a small position just in case they do. But yeah, the numbers are going to have to be fantastic for it to move to the upside. So it might, but God, they got to nail it.
You nailed it on the head there with the all the microchips and the AI advancement. NVIDIA's already got all that kind of priced in, so now where does it go from here? I mean, they're going to have to do something above and beyond, and people are sitting there ready. They're like, what are they going to do to be able to put this earnings on another level? And I don't know if they got that. I don't know if they got that wrapped up yet. So I don't know that I would play that to the upside too far, honestly, for me.
I don't think so. The way things are backing off. I mean, I know a lot of people saw this and they're expecting that again. I don't think you see another one of these moves that occurred in the May earnings cycle. You might get a bounce back up towards these highs. I think if you were able to get a bounce to there, that would be great. But it would not shock me to see some profit taking come in on this earnings report with NVIDIA, unless they somehow just shock the world, and that's what they're going to need to do.
Yeah. All right, so next question we got here, and I don't know how many more of these you want to take, but Alexandru, can we take a look at QQQ as well, I guess, the Qs?
Yeah, that's a really good question. That's a good place to look at because interest rates continue to go up. The dollar's getting stronger. None of those are good for tech stocks, and that's as ugly a breakdown as it gets, Brandon. And the only positive here is we're a touch oversold from the 10-day moving average. Everybody knows my Robism that no security in any time frame gets very far away from the 10-day moving average. But gosh, where does it stop? And there's a little bit of support at 340, and that's not even great. The next point of significant support is all the way down here at 320 on the Qs, and I know people don't want to hear that because a lot of people migrated to them with all the AI stuff and the Magnificent Seven and everything else, but it sure appears to be giving it back pretty quickly. The old adage, you take the stairs to the upside and the elevator down, and that's what the market's doing right now. So I just feel like 340 is in the cards, whether we get a bounce before then or not, and it wouldn't shock me if 340 didn't hold and we see 320 within the next 4 to 6 weeks on the Qs. Looks pretty rough to me.
Yeah, I'm watching the same thing too, and I'm seeing all these things kind of break to the downside. This is really interesting. Every single chart's doing about the same thing. So let's check out, this is Tommy Pham wants to check out Meta. Let's see where that's headed.
Well, yeah, you picked a good one, Tommy, because they were hanging in there pretty well, but they're also succumbing to it, and they became all of a sudden the analysts that hated it way back when it broke below 100 because they were talking about how much money they were spending on the metaverse, and they got out of favor. You can see all the way down here to 90, and then they started focusing more on their core business. All of a sudden, the analyst community fell in love with them again. Institutions started acquiring the shares, and they've had one heck of a run. But even Meta has succumbed to the sell-off over the past couple of weeks. Looks like we're trying to create a doji today. We're not closed yet, so that could change between now and the close. But we've broken below what I had hoped might hold for everybody that was long Meta there at 280. If we're not able to recover that into the close, then we've got a couple levels lower to look at here. The next level of any sort of decent support, in my opinion, is 240. And if we're going to come to 240, are we going to stop short of filling that gap down there at 220? So, I feel like it's had a heck of a run, but it looks like some give back is in the platform or in the cards here for Meta, but that was a heck of a run that it's had this year up until beginning of August.
You couldn't show a prettier chart explaining what you just said a second ago, where you take the escalator up and the elevator down. Check this thing out.
Yeah.
This is like exactly it. You couldn't see that any better. Let's go ahead. Let's do. Looks like SSH wants PayPal. Let's see where that one's headed. And I know, gosh dang, so much stuff happening with PayPal right now too.
Yeah, and they've got all kind of things going on, and they're also an indication of the consumer. As a consumer spending, because PayPal is heavily used. But man, this break below 60 that's ugly. We are oversold again, so we're seeing a lot of things, Brandon. Right, we're seeing a lot of charts that have broken down, but they are little oversold short term. And I just want to make sure I highlight that. That doesn't mean the selling is over. Just any sort of a bit of a bounce here, I think, creates shorting opportunities. And there's Katie again, Brandon. If we can't hold here at 60, there's nothing. It's just, where does it find footing? It's not even in a zigzag to the downside. If it was, then I could come up with some sort of a price target. It's just in a major impulse to the downside. Once we get a corrective bounce, then I could come up with a price target. But right now, looks pretty rough. The saving grace for PayPal, if we can close back above 60 with some follow through and hold that level, then maybe we could see something a little better down the road. But it's got to get back above 60, and it's got to do it pretty quickly. Otherwise, your guess is as good as mine as where it finds bottom. That's a tough one to figure out where it's going to hold.
I think they're just losing so much consumer confidence, and they're trying to obviously do their marketing on their new PUSD, their PayPal US dollar, their token-backed coin, where they're trying to introduce crypto to their platform and some other things. But then they go and they do the opposite, and they start announcing, oh, we're not going to use crypto in the UK. So there's so much indecision, I think, in their marketing plan right now, and some other things happening. And it's not, obviously the charts goes to tell you the stockholders aren't happy and the consumer's not happy, near the customer. So
yeah, no, the execution has been poor timing to have these problems. In a market correction, that's not when you want all that kind of news coming out.
That's right. You were talking a little bit earlier about a stock being oversold. SSH wants to know about, it looks like Keys. RSI is at 11 on Keys right now.
Let's take a look. And oh man, holy cow! Yeah, that's pretty ugly. Then so big drop, big drop on earnings, and where it finds its footing is going to be anybody's guess. Now the Elliott Wave algorithm likes something just below 120. I think that's probably likely going to happen. Even if we get some sort of a bounce early next week, we may not. I mean, Monday may follow through. We might be at that 120 or lower level on Monday, but that's the definition of a broken pattern right there. And the fact that it just didn't even look at 140 as any sort of potential support, I think I would trust that. When you have a wave 3 and it gives you a 5 target, the way it works in the algorithm is, for whatever reason, the algorithm likes that level. And when you're in a wave 3, sometimes the wave 3 hits that level because these are projections. And if it hits that, then it looks for, okay, where's the next likely move? So yeah, I don't think we're done to the downside on Keys. So if you're looking for some sort of a bounce, I don't think you're going to get that for a while here. That looks pretty rough.
Dude, great chart. Brutal chart, though, really.
Yeah, oh yeah, it's brutal. If you're short, you're happy, and I think you got a little more to go to the downside. But if you're looking for some sort of a move up, then it could be a while.
Yeah, no kidding. Let's wrap it up. We got Alpha Oscar here with the last question. Take a look at Pfizer, please. Seems to be breaking out of a downward trend here.
Well, that's been the theme, hasn't it? But in this case, instead of breaking downward out of a trend, this one is trying to move up, and that makes sense. These are defensive stocks, right? The drug sector. We used to talk about the sin stocks all the time, is where money would go to hide: alcohol, tobacco, gambling. Those are our vices, and the viewpoint, right or wrong, through money managers has always been that regardless of what's going on in the economy, no matter how bad things are in the market, we're going to find a way to satisfy our vices. We're going to find a way to drink, smoke, and gamble. But right in there with those stocks are drug stocks, because we still need our medications, right? Everybody needs them, regardless of what's going on. If we have to cut back on other things, we still need our medications. So when the market starts to get weak and squirrely, this is where you can start to look for opportunities, at least to hide money. Even if you don't get much of an upward move, money has to go somewhere. That comes into IRAs and 401ks. They can't keep it in cash by securities rule. Only a certain amount can stay in cash, so it's got to go to work somewhere. These are the areas that they look for. So I think you're onto one here. Pfizer's had a pretty big move to the downside. It is trying to find stabilization here right around 35. I don't know that you get a significant bounce. Perhaps we come up and fill this gap here, but I do like the idea of if you have to rotate some money somewhere, your risk is far less, considerably less in a stock like Pfizer than it would be elsewhere. So yeah, I think you're onto something. Maybe you get a little bit of an upside, but I don't think you're going to get hurt too much, especially after that big downward move, by parking some money in Pfizer until this corrective move in the markets comes to an end. Really good chart to look at.
Hey, Rob, thanks so much. I appreciate you coming to the HUBB channel today. Oh my heck, and thank you guys for all of the questions, the chart symbols, all that stuff. Rob, as always, your knowledge is stupendously out of my league. So we'll say that much. Rob, I'll go ahead and let you have the last word, and then we'll wrap this thing up.
Thanks, Brandon. It was fun as always. Thanks for everybody for spending a little bit of your Friday afternoon. I know the market's not doing what we all would like it to do, but these are times when we have to be realistic and try to limit the damage or take advantage of the downward moves when we can. Enjoy the rest of your weekend. I look forward to talking to everybody again next week. Take care.